It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID Livestream, Series 17, Episode 6. That makes us in the cumulative Episode 102 starts here. Of course, as you will probably know, I publish the Daily Bourse Business Bulletin, Exchange Invest, which analyzes the world of marketplaces in all shapes and form. This week, today, in fact, no less, we had a rare world scoop. It's not the usual forte of an analytical newsletter, but nonetheless, in case you missed it, the London Stock Exchange Group has abandoned selling its exchange technology for matching trades, as well as clearing and settlement in what is apparently a volte-face, driven by the inability to deliver sufficient internal computing power for its own upgrades. A rather remarkable state of affair from the massive LSEG group. Meanwhile, in a move which passed almost nobody by, apart from Exchange Invest, questioning fundamental conflict of interest concerns, that is, a masked banking cabal has proposed their own consolidated tape for European Union stock prices. That seems to rather fly in the face of the logic of having an independent exchange-style vendor of all of those prices, as opposed to banks who are going to be ready to trade on the opposite side of the prices they're showing. Meanwhile, Twitter have partnered with eToro to show real-time stock and crypto information. Of course, many have made a great, exciting point about the fact that that will therefore allow you to be only one click away from opening an eToro account and going and trading. But actually, the postmodern meta is surely to consider whatever happened to data vendors. Once upon a time, they could have been the natural partners for Twitter. I wonder if the LSEG ponders that with their massive Refinitiv purchase. Meanwhile, over in Bit Carnage, DeFi is CeFi. As Gary Gensler remarked this week, the SEC chairman, make no mistake, many crypto trading platforms already come under the current definition of an exchange and thus have an existing duty to comply with the securities laws. Well, that's a pretty firm statement. He didn't appear to be striding the stage with his batsuit per se, but this was clearly a kapow moment for Gary Gensler, as he made it clear he didn't need new rules to regulate exchanges. However, with CeFi and DeFi both seemingly coming under the same auspices, you can expect liberal toy distribution ex-pram from many in the crypto world. Our guest today, ladies and gentlemen, is Jim Oliff. Jim Oliff is going to be talking to us about markets in electronic transition. And there's no better guest to do that with, ladies and gentlemen, for episode 102. Jim is a recent inductee into the FIA Hall of Fame. Jim Oliff was a member of the CME Board of Directors for some 30 years. As chairman of the exchange's Strategic Planning Committee, Jim played a leading role in CME's journey from a member-owned organization to a demutualized exchange and the first publicly traded marketplace in the United States of America. Jim helped to guide the exchange's brokers and traders through the critical transition from open outcry to electronic trading as chairman of the Electronic Transition Committee, spearheading the creation and build out of the Globex Learning Center. He also chaired the CME Clearinghouse Risk Committee, introduced the clearing of interest rate and credit default swaps, and chaired CME's Professional Responsibilities Committee, leading a program that became a model for exchanges worldwide. And I don't think we've even mentioned it yet. He was also actually the deputy chairman of the Chicago Mercantile Exchange at one point in time. Jim, welcome to the show. Where in the world are you today?
I'm in my condo in Clearwater, Florida. Sunny, gorgeous, beautiful.
Absolutely marvelous. It looks sensational behind you. I hope you're having a lovely day in the sun. And indeed, your delightful wife, Margot's got an opportunity to enjoy those sunny rays before you head back to Chicago in a few days' time. Looking like a gorgeous day. So tell me, Jim, how did you come to get tied up into this wonderful world of futures and options?
It all began long ago when I was at a debate tournament at Kansas University, And as I was making my final argument in the final round, I collapsed on the podium. They discovered that I had an ulcer and mono. So I dropped out of school for a semester, and my father wanted me to learn something about business. So he had me come down to the exchange where he was a member, and he created a monster. I didn't want to go back to school after that. I was just so enthralled by the markets, but reason prevailed, and I went back, and knowing that my end goal was to get to the exchange, hopefully become a trader, and it went from there.
And what an incredible story. So actually, that leads us to a very interesting pointer, because your father was himself a leading member of the Chicago Mercantile Exchange.
Yeah, he was. And he was one of the many people who taught me the business. He wasn't a great trader. And basically, I learned the wrong way to do everything from him when it came to trading strategies. But his knowledge was amazing. And his relationship with his fellow members was superb. And his integrity could not be matched. So, a wonderful role model.
And so what markets was your father Herschel involved in?
Eggs, Idaho potatoes, hogs, pork bellies. And it got to the point where wherever he heard noise, he would end up, because he knew that a market was moving. So he would traverse the floor. And as the floor got bigger and bigger, and as the exchange moved to dampen the sound from one area to another area, he lost that edge that he had, which was the ability to move quickly to where the action was. And electronic trading actually became important to my father, because he was able to see on the screen the rapidity of the price moves, and he knew that he would have to move, or that he would start trading that market.
That's interesting. And I mean, that was obviously in the early days when they had large television screen terminals hung all around the floors of the Merc and the other futures floors around the world. And he was able to then spot. And yeah, I mean, I can remember those amazing heady opportunities to see things happening where you could see things moving on screens. And gosh, quite incredible to think how much informational advantage you could glean as well from just the noise and the lifeline of the floor. Quite remarkable. So you went off and finished your studies, and then you came straight back to the floor?
Yeah. Well, actually, not completely. I got my undergraduate degree from Brandeis University, and then I went to Northwestern Law School, because my father always said that the exchange business was too good to be true, and I needed to have a profession to fall back on. And he was also an attorney, and he practiced exactly 1 year. And the deal that he made with me was that if I practiced law longer than him and gave it a chance, and I decided that I didn't particularly care to continue with the practice of law, that he would give me his extra membership, which was an IMM membership at the time. And so I practiced 1 year and 1 day. 1 day longer than him. I qualified for the membership, and I made application, and I came down to the exchange.
That's quite incredible. A year and a day, like the Isle of the Pussycat, except in your case, you were studying or professing in law. It's quite amazing altogether, the number of lawyers who were actually around the CME around about that time, who had dual careers in various different ways. Of course, you're just one of several notables I can think of. So you come down to the floor.
We had a lot of professional people.
Yeah.
We also had a lot of pharmacists that came to the floor. I can't explain that, but we had accountants, we had some doctors, especially on the IMM side, which was the new kid on the block in the 70s. A lot of people were intrigued by the international markets, and a lot of professionals bought memberships at the very beginning.
That's a very interesting pointer. And yes, you're quite right. I mean, I remember from the Life floor memorably, there was a very voluble Life local in the FTSE futures, the FTSE 100 futures pit. And it was quite entertaining because he'd actually been a lecturer at, I think, Liverpool University. And they'd sent him off to do a thesis for his doctorate. And he decided to study the business of floor trading. And as soon as he got his doctorate, they said, well, that's fantastic. And they sat him down for a decent meal and said, absolutely wonderful, old boy. Now, you're going to get tenure in a few years. We're really excited. We think you're on a fast track to be a professor. And he said, no, I just wanted to get my doctorate. Actually, I'm off back to the floor, and promptly went back and became a very successful local for the rest of the floor's life, in fact. So the IMM, very interesting times. The International Monetary Market is set up to do financial futures in the wake of the United States of America coming off the gold standard, one of Nixon's two epic moves. Tell us a little bit about what it was like getting onto the floor for the first time.
Well, it was certainly not what we see today. I remember we had blackboards that whenever there was a price change, they would call the price out, and they would put the most recent price on the blackboard. And the pits initially in the currency quadrant were very, very small. And actually you traded on the blackboard. So you would put your bid or you would put your offer into the market, and they would rank it by price. And when there was a match, there was a match. But you also had the ability through that blackboard to see who you traded with and the firm that they represented. So the other advantage of that was that they could take. I remember when the biggest technology advancement at the exchange was the Polaroid camera, because they were able to take an instant photo of that blackboard that showed each transaction. They could take the picture with the Polaroid, and in 1 minute, they could erase the blackboard and move on. And they would just leave the picture up so that if you had to check your trades, you could check your trades. So we've come along since.
It's fascinating, but it's very interesting how at all points in time, markets have always been trying to deploy new technology in a way that would help the marketplace to move forward. I'm here talking to Jim Oliff, former vice chairman of the Chicago Mercantile Exchange. We're discussing markets and electronic transition. Do please ask a question if you've got one, ladies and gentlemen. And also, we would really adore it if you'd send us a little bit of love, please. All those likes really help get us up through the artificial intelligence of those search engines and other things, so that more people can watch our content and are aware of it happening throughout the interweb, whether you're watching us live today on Facebook, LinkedIn, or YouTube. So Jim, you go to the floor, you build yourself a successful career, but you then follow really in your father's footsteps, because your father had also been rather involved in the member organization and management of the exchange as a member.
Yes. He was not on the board, but He was very active in the membership committee, and he was very active in the gratuity fund. So whenever a member would pass away, they used to pass a hat and take up a collection for the widow or for his family. And the gratuity fund, the exchange created, and we assessed every member $10 whenever there was a death. And my father chaired that, and he would have to make a report at every annual meeting that we had. And during the course of his presentation, he would always stick in a little humor. Everybody claimed that his speech was the one thing of the annual meetings that they always looked forward to. He had a great, great sense of humor, and the members appreciated it.
Oh, that's wonderful. It's an incredible story. I remember once visiting you in Chicago and seeing it was magnificent. You had your dad's original desk, complete with his name, a wonderful old-fashioned wooden name tag on a magnificent desk. It was quite sensational.
Yeah, it was actually my grandfather's desk. And when he left W.F. Hall Printing Company, he was the vice chairman and treasurer of that company. My father took over the desk. And then when my father stopped working, I took over the desk, and it's now in my bedroom back in Illinois. And it was so big and so heavy that you couldn't get it through the door. And we had to take out the windows of of our bedroom and bring that desk in through a crane. And my father had to take the doors off of his office in order to get the desk into his office back at the exchange. So that desk has a long and colorful history.
It is quite the most incredible desk, I've got to say. I mean, it's certainly something which would look at modern day IKEA furniture with considerable disdain, to put it mildly. It is a very, very solid item of furniture, and I'm not surprised it's already gone through 3 generations of the family. It's an incredible thing. Hello to F. Hirsch. Thank you very, very much for joining the show, and it is a delight. I agree. I am very much enjoying our guests' perspectives today, as well as we're here discussing markets and electronic transition with Jim Oliff. So Jim, I mean, we'll make a bit of a quantum leap. When did you really start getting interested, fascinated, or intrigued by the opportunities for technology in the exchange, brokerage, and trading?
Well, it was a long time coming. As I said, I was intrigued by that Polaroid camera and what it could do. But in the pits, it was also, I remember I was an order filler, and I represented several major banks. And so we first started, it used to be that you would write you would write an order on a piece of paper, you would timestamp it, and a clerk would run it into the pit. The broker would execute the order. He would write the price, the opposite broker and the opposite broker's house. He would give it back to the runner, and the runner would bring it back to the desk. The phone clerk would then call the customer back and give him his fill. And then the order was sent upstairs to the firm's office, and it was then key punched into our clearing system. And then the trades were matched that way. So a number of things happened. First of all, in the world of currencies, and especially the banks, they were performing an arbitrage. So they were trading the cash markets, and they would utilize the futures markets to keep them in line with where the cash market was. And so that was a simple arbitrage. Well, it obviously became much too difficult to have to physically write an order on a piece of paper and bring it down to the floor. By the opportunity, that arbitrage could have been lost in that period of time. So the first semi-technology that we had was the use of hand signals. So the phone clerk would communicate directly with me or with my clerk and convey the order through hand signals. And hopefully the signals were sufficiently different so that not everybody could see the order coming in and what the order was to do in the marketplace. And so that became very fascinating to me. And I was one of the original users of the hand signals in the currency market.
Quite incredible altogether to think about that, Jim. That, I mean, you were there at the point when hand signals and the like were all a major move forward for people, as opposed to the old running order. And I think you also, I mean, one of the things that I always find fascinating when you go, for example, to New York, is how the floor of the New York Stock Exchange had an office off to one side. And when you look at JP Morgan's original office was not actually directly facing the New York Stock Exchange, but slightly off to an angle. And a lot of people have never understood why that was. And the reason was because actually JP Morgan had an exit and entrance for his runners, that they had the shortest possible distance to make it across the pathway straight into the members' entrance of the New York Stock Exchange and get to the floor. So it was early low latency trading, but it was doing it by shoe leather in order to manage to get across the road and straight up. And it's quite hilarious because people always think, why did JP Morgan not want to build right in front of the New York Stock Exchange? Well, the answer was the smart money wasn't getting in the members' doors, not actually looking at the visitors and the dignitaries who were coming in through the front.
That's correct. And to me, technology is just a gradual evolution of the desire for speed and proximity. And technology keeps adapting in order to provide those advantages. And if you think about any of the changes that have taken place, I think that you can trace them in the capital markets to all of that. The desire for speed and proximity.
Yes, absolutely. Speed and proximity at all points in time. It's exactly what everybody's wanted. And you look at all of those things that changed that. I mean, the telegraph, for example, which was obviously a huge boon for not just the coastal markets in the United States of America, but particularly also Chicago, indeed. Quite an incredible change in terms of what went around. What was it like being in Chicago during the course of that huge build-up of the 70s and 80s as the long-standing, I mean, century-old commodity markets at the Board of Trade and the Merc were suddenly turned into these really international financial powerhouses because of the financial products business?
It was an incredible journey, Patrick. I don't know. There was something new every day. We gathered the attention of the world, and we became the focus. I kept referring to a statistic that the notional value of everything that we traded at the CME was over $1 quadrillion a year. And we dwarfed the equity exchanges and The New York Stock Exchange, people used to always think that that was the biggest exchange. But in terms of notional value, what we were trading was 10 to 12 times greater than that. It was 10 to 12 times greater than the US GDP. So it was humbling and exciting. We had a lot of international visitors. We became the focus of movies, a lot of exposés. There was just a sense of excitement that permeated the entire exchange. And in fact, the city, we were the city, more or less.
Well, it's incredible because when you look at the loop, I mean, two core areas of the loop have always had the Chicago Mercantile Exchange more or less on one side and the Chicago Board of Trade more or less on the other. It's quite amazing when you look at how they dominated the landscape of downtown Chicago, and certainly with the number of people who worked on the floors, it was quite incredible to see how that fanned out into the workspaces and indeed the bars and so on of the local area. So tell us a little bit about, I mean, the markets in transition. When did it start to become clear to you that this incredible edifice of the floor was going to be challenged by technology?
When we started trading Eurodollars, which were really just time deposits overseas. We would close at 2 o'clock in the afternoon, but yet interest rates and risks were 24 hours a day. So it was Leo Melamed who recognized that you needed to have more hours of trading. And you couldn't have those hours by requiring traders in one time zone to trade 20 hours a day. It couldn't be done. They didn't have the stamina to do it. And it wasn't natural, or we didn't think that it was natural at the time to trade during nighttime hours from Chicago. So we made an alliance with the Singapore exchange. Elizabeth Sam, I think, was the chairman at the time, who was also inducted into the FIA Hall of Fame this year. And we granted them the right to trade our Eurodollar contract in their time zone. And we also created a mutual offset agreement with them, so that if I put a position on in Chicago and I took it off in Singapore, Singapore would then transfer that position back to Chicago, and it could be PNS'd out on the books of the Chicago broker who initially put on the position. And that became the first hint to us that the marketplace was significantly altering, and that we needed to find ways to trade much longer hours. Then as we looked at the currency markets, we noticed that currencies moved 24 hours a day. And it became a question of how our currency markets compete. You had Reuters, you had Instinet, you had all of these computer systems that banks and everybody were using that the public didn't have access to. And so that became a second prong. And then Leo Melamed came up with the idea that perhaps what we should do is work something out with Reuters so that our futures markets could also be on those terminals. Now, we didn't want them on the terminals during the day and when there was normal price discovery in the pits. We wanted them on at night. And so we entered into the first agreement with Reuters, which was the initial Globex agreement. In fact, the initial name for what we were going to do, I think, was post-market system, and its symbol was PMS. And somebody finally explained to us that that wasn't the greatest acronym for a system. It didn't work with the female population in particular, and so we had to alter that, and that's how Globex came to exist.
Funny how these brands occurred. As I seem to recall, the T-shirt with the logo, whatever it was, have you got PMS or have you got PMT, was briefly available at one Boca Raton, and is now probably the most prized and valuable piece of memorabilia ever distributed by an exchange. I think shortly before they were removed from circulation. But we got a great question here, actually, and it's one that was on my mind as well, Jim. We're here talking about electronic markets and the transition there too with former Deputy Chairman of the CME, Jim Oliff. It comes from our mutual friend, Jeffrey Carter. Jeff, great to see you. He mentions the fact that I used to get calls from the Cymex floor to make markets in the wee hours. Mutual offset was how the CME beat life in Eurodollar futures. And actually, I think that's a very, very appropriate point, because, I mean, the Life Exchange launched in the early 1980s. There was a lot of confidence in London, which was the home, after all, of the Euro-dollar market for offshore deposits, as you mentioned earlier, that it would reign supreme. And yet, actually, Chicago came through. And I certainly think that the mutual offset was a piece of genius, actually, because it brought Singapore into the fray. It really made the Cymex market in Singapore into a coherent business going forward, and also secured that incredible monopoly that has now become a monopoly on the US yield curve at CME Group.
Absolutely. And Jeff is correct in pointing it out. It was because of our fear of London that we went to Asia, because Asia opened before London did, and Singapore was the place to go. We didn't feel comfortable going to Hong Kong because it was British at the time, so Singapore became the natural home that we went to, and I remember when they first started the trading floors, a number of our traders, I don't know if Jeff was one of them, but a number of our traders actually went to Singapore and worked with the traders in London and actually traded on the Singapore floor for a period of time to get their market off the ground. So it was creative. Leo Mohammed was... he calls himself the father of futures, and he is definitely the man who led the exchange through many competitive minefields and made the exchange come out as number one.
No doubt about it. He certainly undertook many great paternal acts, which helped keep the CME at the forefront of development and what was happening. I think you're absolutely right. And certainly his thinking in terms of bringing together Globex was a masterstroke, and also bringing together the idea of Globex with Reuters, which was such an interesting idea, because at that stage there were a paucity of electronic networks that were actually streaming around the globe. And in fact, I mean, that was back in the day when Reuters reigned supreme, and there was an upstart in town called Bloomberg, which was just trying to find its feet really in the world of information vending. It's such an incredibly different world that people don't follow just how much it's changed over the course of that time. So Globex runs out, it's rolled out rather, it becomes really quite a remarkable success after hours. And in fact, you then also brought in a series of very interesting partners into that, because I seem to remember that the Paris Bourse, or at least the Matif, was ultimately a member, and you had a number of exchanges from around the world all trading on your electronic network after hours, which was quite fascinating. But it took a while longer for the CME to get to this notion of pure electronic trading.
Yes. It certainly was a challenge, given that open outcry. We had a whole constituency. We had 500 traders on the CME. We had 750 traders on the IMM. When we began trading stock index futures, we brought in another 1,200 traders that way. So they all had vested interests. We were a membership organization. There was no way that we could even consider electronic trading at the time, because you would have to get a vote of the membership, and the membership was too heavily invested in the floor. So it required something else to move us off that space. And that was the birth of Eurex, and the way that Eurex took the Bund trade from life and moved it to its electronic exchange in Germany, which was its natural home to begin with. But they fought it, or they did it the same way that we became successful in the currencies. They created an arbitrage between the London market and the German market. And they gradually transferred the liquidity and the price discovery from the floor to the screen. And that became a very, very real threat. And it was that threat, as we thought about our currencies and as we thought about our stock index products and as we thought about the euro dollars, that threat that somebody else could create that electronic marketplace and transfer the liquidity, I think, is what drove us to creating the electronic marketplace. And it's what enabled us to convince the floor that something had to be done. And there you have it.
Well, it's an incredible story, really, because you just go through it in a matter of a few seconds. But we who saw what went on, we know that it was quite something to manage to achieve. And actually, Jeff Carter has come back here with two great comments, and I wholeheartedly agree. Jimmy understates his influence as well. He led the entire transition from open outcry to electronic trading at the board level. He is a tremendous herder of cats. Now, I got to say, I think that's totally true. I'm not trying to deprecate Leo. I think Leo was an incredible leader. There were several other people who understood and I think got the idea of what needed to be done. For example, we've got, well, I can think of at least one chairman of the CME apart from that, Scott Gordon, who was also very much in that camp, I think, trying to move towards the electronic trading marketplace. But certainly it's one of the things which I think was quite awesome in what you achieved. And I mean, Jeff goes on to note, Jimmy's natural constituency was the floor broker community. So he had some massive internal battles to fight within that constituency. He does not get the credit he earned for doing that. I wholeheartedly agree once again, and that's actually one of the reasons
much
why.
too kind.
I don't think so, Jimmy. I think you are far too modest. Actually, I'm going to contradict you, my dear friend, because I think you did a great deal, and that's one of the reasons why so many of us were so eager to nominate you for the Hall of Fame this year, and so delighted that the FIA accepted the nomination and elevated you because you did so much. And I mean, in the Globex Trading Center, the Globex Electronic Trading Center, I think it was incredible because you were pushing to try and help the floor traders to make the transition to electronic trading. And that's something no other exchange in the whole world actually coherently managed to push forward. And I think that's something that actually stands to the tribute of not just you, but the Chicago Mercantile Exchange as a member organization that genuinely wanted to serve its members.
Well, thank you. But, Jeff was on the board with me during this period of time. Scott Gordon had the vision, and he's the one who convinced me that I should focus on strategy and long-term thinking. So Scott was a tremendous influence. Ira Harris was another person that also had the wisdom and the foresight as we moved ahead. And Leo was wonderful. And it was really his ideas that we all just had the ability to execute. But the very first step that we had to take was not going the electronic route, but rather converting from a mutual organization to a for-profit entity.
May I stop you there? May I just stop you there? Because actually, I wanted to ask you about that because, in fact, in my brief citation for your Hall of Fame entry, I actually quoted Leo's book where he reckoned that was your finest hour. Tell us about that process. It's so amazing.
Well, I made a presentation at the annual meeting that explained that really basically said we have electronic threats. Our markets are in jeopardy. And we have to be able to move swiftly. And you can't move swiftly in a membership-driven entity. Likewise, it got to the point where it used to be that if somebody owned a home, that was the biggest asset that they had for a period of time. And it got to the point where your membership or your series of memberships, given the ones that all spun off of one CME membership, they became a much more significant holding than your home. And the problem was that you had to sell your seat completely, or you had to stick with an asset that you could not monetize. And that became a secondary reason for us to go for profit, so that people could piecemeal and take some small profits from their initial holdings. And so that became significant. We had 3 different meetings with the floor where I was the presenter. And Leo and Scott both thought that it had to be me because Leo, you either loved Leo or you hated Leo. And floor traders distrusted that he wanted to go electronic. And so they didn't want him to be the message bearer. And so they needed a third person to come in and do that. And given that I had been very good in public speaking. I had a rapport with the membership because I took over the gratuity fund after my father stepped down. So I was known for my humor and my integrity. And so I became the person to deliver that message.
Yeah, quite incredible, and actually, it's very well portrayed. And I think it's For Crying Out Loud. I think it is Leo's book about one of many Leo books about his life at the CME, where he talks about that as your finest hour, where you address the members and manage to push them forward. And it really was truly impressive. And indeed, we have another lovely comment from the good Mr. Hirsch. Jim's integrity and ethics were also a huge part of what made him an important part of the exchange. Good grief. It's starting to sound a little bit like This Is Your Life, Jim. I'm going to open, the doors are going to open onto the patio, and we're suddenly going to bring out a couple of obscure relatives you haven't seen for the last 25 years or something. It's great. It's lovely.
I brought out two of them, Jeff Carter and Fritz Hirsch, who is my best friend.
So there you go. Well, it's good. No, it's really, really good altogether. And thank you so much, Fritz Hirsch. It's really, really joyous to see your messages here, because I think it's good that we're in a position. Jeff Carter, I think it is more than that. Jimmy had to be Churchillian. Well, there you go. It's a great remark altogether. Hey, Jeff Carter, why don't you come on this show one of these days? I'd love to talk about your journey from floor trader to venture capitalist. I think that would be a really, really good show. Consider yourself invited. I hope that doesn't disincentivize anybody else from making too many questions or remarks on this show, because you're all welcome at all points in time to talk to Jim and I on this fantastic discussion about the transition to electronic markets. So, I mean, Jim, you go through this amazing electronic transition with CME. It's quite incredible. First of all, as you say, there's the demutualization. There is also the listing of the exchange at the New York Stock Exchange, the first securities market to do there. And then also, I have to say, I mean, I remember this well because having worked a lot with investors at that point in time, they started to get very excited about investing in securities exchanges. And they would phone up and they would always say, and this harks back to your comment about the quadrillion a day market. They were always saying, well, okay, so the biggest exchanges in the world. So let me see, it must be like NYSE, NASDAQ, and I don't know, and London Stock Exchange, you know, and they go, not even close. And I mean, I eventually devised Young's pyramid for exactly that reason, so people could see. And in fact, atop that pyramid for longer than any other exchange over time has been the CME. I think the only others that have ever topped it actually were briefly LSE, briefly ICE, Deutsche Börse, who've now faded away into the second tier, and the Hong Kong exchanges, which remains along with ICE in the top tier. But it's quite an incredible position to see how CME, you demutualized, go electronic, you run the Globex Electronic Center, and then you also get involved in some other fascinating developments as the CME group expanded that took you to Europe and give you all sorts of other very, very interesting perspectives.
I was very involved in London. I went to London 1 week a month for many years. We had an office there. We tried to create a European exchange, and I sat on the board of that exchange as well as on the board of our London clearinghouse at the time. So we knew that if there becomes a crisis, first market that's going to react is in Asia, and it's going to go then to Europe, to London, and the last place that it comes before it gets back to Asia is the United States. So we always had concerns about what would happen if there was a default. Would everybody, for example, try to grab the money in all of those other time zones before we could react? Which was another reason why we thought about electronic trading and electronic clearing being a 24-hour process. And the flows of money being a 24-hour process. All of that made sense to us. And I was fortunate to have been selected to deal with those issues and to sit on the boards of those issues. It was a great compliment and very time consuming, but also very, very fulfilling. And it got me to learn a much more global point of view than what I previously had.
It's fascinating. And also, not only did it give you a much more global view, but certainly you look at how clearinghouses have grown in importance around the world over the course of the last, well, particularly 15 years. And yet, you look at all the work that's been done on clearinghouses, and here we sit with debate about CFI versus DeFi. And indeed, last year we had that whippersnapper upstart, Mr. Bankman-Fried, who wanted to tear down everything that you'd been building so assiduously within the CME's clearinghouse and the other great CCPs of the world.
Well, I seem to recall that when he was at FIA last year, he basically told the exchanges that he was going to put them out of business. And he told the clearing firms that they were going to be irrelevant. So we've come a long way.
Yes, it's been quite a spectacular year. It's been rather like dog years in many ways, hasn't it, over the course of the last year? Because it was hard to believe I think the takeover of Boca last year by the crypto exchanges led by SBF, but it all felt very much to me like the takeover of Boca Raton by Enron and the B2B exchanges 20 years earlier. And few people remember the B2B exchanges these days. Even fewer will remember that the only one that actually survived of the B2B exchanges in any way, shape, or form independently was, of course, the Intercontinental Exchange.
Correct. And eBay.
And eBay. Absolutely. No, it's quite true. And it's quite interesting. And in fact, one of the things I think is great, just as an aside about that, I was having a great conversation in Boca because I met the Nicholas Agazin, the chief executive of Hong Kong Exchanges. And the first thing I was saying to him was, how much fun was it going from where he's been for many years on the board of Mercado Libre, which is essentially the eBay of South America, and a dominant player there, much more so than Amazon or eBay have managed to be in the area. And he was quite tickled at the idea that people made the connection. Yet it seems to me logical. They're all electronic marketplaces, although our parish of exchanges is subject to a lot more regulation, quite obviously. So tell me, Jimmy, when you look at the business, the interaction between clearing technology and so on, that opened up to you some other work because you've also had obviously a kind of a day job alongside CME. And in recent years, you've done a great deal of active investing and operation and been involved in various technology businesses.
Yeah, the first one that I got involved with was with a company called FastFill. And I was part of the team that recruited Keith Todd to be the chairman and the chief executive officer. And Keith and his ally, who was his chief technology officer, a wonderful person by the name of Hamish Purdy, they saw that software was a service and should be delivered as a service and not as a standalone installation. And Keith kept thinking of cable companies with TV. You want to add a new channel, you just call the cable company and they push it through to you. And he thought that that's the way that trading services should be delivered as well. And matching engines should be delivered as well. So you could make one change, you only had to install it in one place and then permission it out to all of your users. And I bought into that notion. And then the question became, how do we get distribution and convince people that our trading platform was better than the others? And the Goliath in the room was Trading Technologies, TT. Everybody wanted that platform. And It's interesting because now Keith is the CEO of Trading Technologies. But I was intrigued by all of that, and that was a wonderful experience. And then Fastville ended up getting sold to Ion. And Keith considered what his options were. And he came up with another brilliant idea, which was that you should be able to have one platform where you can monitor all of your risks, not only your trading risk, but your capital risks, your bookkeeping risk, and everything else. And so he again thought of creating, through software as a service, this one holistic platform, which is called KRM. And I was fortunate to be on the initial board of directors of that company as well. So rather late in my career, I learned about something other than the exchange business. And I had some great mentors, just as I had great mentors, and I stood on a lot of shoulders in the exchange world. I had the exact same thing in the for-profit world.
And indeed, Keith Todd was a magnificent guest of episode 66 of IPO-VID, which you can go back and check in our archive.
I already have.
Yeah, well, yes, absolutely. No, I was meaning that for our viewers, Jim, rather than necessarily for you. I'm sure you had watched it already. So, however, that brings me really to an ideal and opposite moment as we close this discussion, which could go on for hours. It's been such a joy today discussing electronic markets in transition with Jim Oliff. Jim, you've lived through it. You've played an active role in making it happen. Where does the capital market revolution go next?
You gave me a heads up on this, Patrick, and so I've done a lot of thinking about it. And I had the opportunity to talk to Scott Gordon, and he had the courage and foresight, as I said, and he had that vision just like I had that vision. I think the capital market revolution will continue to evolve. But regardless, it's always going to be based upon what I call TLC. And TLC is not tender loving care, but rather in the capital market world, it's transparency, liquidity, and creditworthiness. To that end, I think that market structure is always going to require liquidity providers. It's going to require end users and intermediaries. Credit worthiness, to me, will always imply custodianship of funds and instruments and some sort of financial guarantor to the entire process that stands behind each transaction. To that end, I think that I agree with Craig Perong, who was a guest of yours, I believe, in March or January, that centralized clearing is going to continue to be around for a very long time. I also agree with Keith Todd that trading applications and trading tools are going to continue to be commoditized. By that, I think that Keith meant that sophisticated trading tools, data analytics, is going to be available to the masses at reasonable costs for all asset classes. Likewise, access to all marketplaces is going to continue and increase. I agree with that completely. I think that we'll continue to see technological advancements, and we may see different forms of market structure. I think that you might see auction periods increasing in length in order to attract the liquidity that's necessary. I'm not a technologist, so I can't envision what those advances will be, but I'm completely certain that innovation and advancement are in store. And just as technology is an absolute given, so is regulation. And I think that we're going to have bouts of self-regulation, industry regulation, national regulation, and much more unified global regulation. No matter what, regulation or the relaxation of it is going to play an important role in going forward, and it's going to create ebbs and flows. I think there's going to be crises. I don't think that you can avoid them. And that's going to lead to more regulation, and that will gradually move away over time until the next crisis comes. Somewhere in all of this, I think that the insurance market and the hedging markets are going to gradually merge, and that's going to be interesting. I think that there's no question that we're going to see a lot of different sorts of products. Climate change and carbon emission trading is one example of that sort of product that has grown and expanded. And really, we owe a lot to Richard Sandor, who is certainly the Board of Trade's answer to Leo Melamed. But now you have to think about water, temperature, hurricane risk, rainfall risk, medical costs, battery metals, other climate change types of products. We trade some of that today, but I think that we're going to find ways to trade each of those that are better understood and trainable by all than they are today. I think they're going to become commodities, and someday someone is going to figure out how to structure a marketplace around each of those that the average person, which is necessary, can understand and take a view of market risk. Finally, I think that we're going to have booms and busts, ebbs and flows, but that's what history continually teaches us. No matter what the capital market revolution becomes, you so eloquently wrote about it in the 1990s, and I think that it's going to continue long into the future.
What can I say, Jim Oliff, but amen to that. Actually, I can add nothing else, except I would like to say that not only do I agree with you about TLC in terms of the way you look at it, but I also wish you a lot of tender love and care into the future. It has been a joy today. Thank you, Chuck Mackey. I think your words are perfect to take us out of the show today. Well done, Patrick Young. Thank you very much, Chuck. Good to see you, Jim Oliff. Your recognition from the FIA is well deserved. Hear, hear, ladies and gentlemen. It has been a marvelous show today talking about markets in transition with a true capital market revolutionary, Jim Oliff. Jim, it's been absolutely a joy to know you through all these years, and so good to have you on the show. We've been waiting for a while in order to manage to get you here, and I'm delighted you could make it. Thank you very much to all our contributors today, to Jeff Carter, to Chuck Mackey, to Fritz Hirsch. It's been great to have your questions. We're looking forward to Real-Time Risks with Alex Lamb. That's going to be coming up next week at the same time, same place, ladies and gentlemen. But for now, let me just say thank you very much, Fernando, Janella, and Marianne, for a super job in production. Apologies for the slight animal noises earlier, ladies and gentlemen. The menagerie was getting a bit restive beneath the window of this house. Jim Oliff, it's been a joy. Thank you so much for being a great guest. I hope we'll see you again sometime soon and we can talk more about the revolution. In the meantime, ladies and gentlemen, have a great week in life, markets, and indeed in blockchain. My name is Patrick L. Young. Thanks for watching.